about personal finance and investing. Now today I'll be sharing about investing in stocks versus cryptocurrencies. Now both types of assets can make you rich, become a millionaire, and retire early, but they are very different in terms of their nature, returns, and risk characteristics. So in today's video, I'll be breaking them down and sharing with you how you can start your investment journey in both stocks and cryptocurrencies. Now it is very important that you understand what you are investing in and not just blindly follow other people's actions if you want to avoid losing money in financial markets. So I hope that this video will be insightful for you. First, let us compare the nature of both assets. Let's start with stocks. So if you own the shares of a company, you will actually have a percentage of ownership of the company's assets. So for example, if the company has 1 million shares in total and you own 1,000 shares, you will have a 0.1% ownership of the company's assets. Now, as a shareholder, you may have voting rights whereby you will be able to vote on the approval of major decisions within the company. You can also be entitled to the company's profits if the company decides to distribute out dividends in the form of cash. So with shares of a company, you actually have entitlement to assets and cash itself. Now, in terms of value, a stock price is dependent on the future cash flows of the company. So if a company is expected to grow its profits and cash flows moving forward, then the stock price should be reflective of that long-term success of the company. If a company is already generating good and stable cash flows and is expected to continue doing so, its stock price should reflect that expectation as well. However, there may be times whereby the stock may become overvalued if a lot of people are buying the stock due to hype, because everyone is also buying it at the same time. So in that case, the stock may not be really reflective of its true cash generating potential based on the current stock price. Also, when the market is bad, like during a crash, people may be panic selling all their stocks, and this can cause a stock to become undervalued. Now, there are many different types of stocks that you can choose from. You can choose according to the sector. There are energy, financials, healthcare, consumer staples, information technology, etc. You can also choose stocks according to their different categories, like growth stocks versus value stocks. So growth stocks are typically technology stocks, whereby people expect these companies to produce profits or revenues that are growing rapidly across time. Then you have the value stocks, which are typically blue chip companies that have strong and stable cash flows. So if you want to understand more about growth stocks versus value stocks, you can check out my another video, which is linked in the description section below. Now, cryptocurrencies are digital currencies built using the blockchain technology. So they can be used for transactional purposes. Say you want to send money to someone abroad. Using cryptocurrencies, you can do so at a faster and cheaper way compared to traditional money transfer platforms. Other than that, you can also use cryptocurrencies to pay for stuff online, like through using PayPal, or even offline at certain retail stores that will accept them as a form of payment. Other than that, digital currencies can also be used in the case of decentralized finance to execute smart contracts. So it is similar to you depositing money in a bank, which is then being lent out to others, or you borrowing money from a bank. You can also do so using digital currencies by going through a DeFi platform. Other than that, you can also use cryptocurrencies to purchase NFTs, otherwise known as non-fungible tokens. So these are digital items with their data being stored on the blockchain. So some examples can be art, music, pictures, video, or any form of digital collectible. Now, unlike stocks, cryptocurrencies do not have intrinsic value. Its value is not dependent on any assets or cash flows. It is entirely dependent on supply and demand dynamics. So if demand exceeds supply, then the price will go up. But if supply exceeds demand, then the price will go down. So if you want to be a successful investor in cryptocurrencies, you will need to buy low and then sell high. Now, because cryptocurrencies, it is a relatively new asset class and there is still a lot of speculation and hype around it, so its value is not that stable yet. But if demand and adoption increases across the long term and as blockchain technology is being used in more areas, then the value of cryptocurrencies should go up across time. So as of now, in the middle of 2022, there are more than 18,000 cryptocurrencies, and each of them may have a different function than another. So it is very hard to keep up with all of them. So it's best to stick to the larger and more established cryptocurrency projects, because the smaller ones usually are just scams designed to take away your money. So for safety purposes, stick to the ones that are in the top 10 list. And Bitcoin, Ethereum, these two have withstand the test of time so far. So they are the safer ones if you're just starting out your journey in cryptocurrency. Market access. Where can you buy your stocks or cryptocurrencies? So for stocks, you can find it on various stock exchanges during their trading hours. For example, the US stock market, you can buy stocks during trading hours like from 9:30 a.m. to 4:30 p.m. Eastern Standard Time, and only during US weekdays, excluding public holidays. While for the crypto market, it is accessible 24/7. Yes, the crypto market never sleeps, even during weekends or public holidays, so you can trade whenever you want. If you want to invest in stocks, you can check out HabitTrade, which is the first crypto-friendly stock trading platform that allows you to buy US stocks as well as those listed on Hong Kong stock exchanges using the cryptocurrency USDT. So USDT is a stable coin in which its value is pegged to the US dollar. So normally people will use fiat currency like US dollars or Malaysian ringgit to buy USDT and then use USDT to purchase other cryptocurrencies on crypto trading platforms. Now, if you have USDT and you do not want to spend it all on cryptocurrencies because, say, now it's a bear market and then you want to diversify your portfolio, then you can transfer your USDT from crypto trading platforms to HabitTrade and use it to buy stocks. So you can download the HabitTrade app via Google Play Store or the Apple Store. Now, if you sign up using my referral code, you will get free stocks upon your first purchase of any stock on the app. So check out the link in the description section below and sign up now. So personally, I have been using the HabitTrade platform for a while now, and I like that it has a simple interface. There is a trending tab whereby you can check out the trending stocks, and there's also the news tab whereby you can check out the latest news in the stock market. Also, there will be an airdrop event that will be happening soon, so stay tuned and keep watch on HabitTrade's Twitter account for more news. So here are some info on the rewards that you can get. Once you purchase $300 worth of stock for the first time, you will get at least a $5 stock. Once you purchase $500 worth of stock for the first time, you will get at least a $10 stock. Now we are going to compare the performances of stocks versus cryptocurrencies. So for stocks, I'm going to use the S&P 500, which is a representation of the US stock market because it includes 500 of the largest companies within the United States, and it is generally being used as a benchmark for comparison purposes. For cryptocurrencies, I'll be using the first and largest cryptocurrency, which is Bitcoin, because Bitcoin represents a majority of the total crypto market, and it has also been a leading indicator whereby the price movements of other coins, which are smaller, also known as altcoins, their movements tend to follow the direction of Bitcoin and also to a larger magnitude typically. So let's compare S&P 500 versus Bitcoin. So let us start with stocks. Here we have the long-term chart of the S&P 500 since its inception. And then we have another one since 1995, prior to the burst of the dot-com bubble in 2000, and then all the way until mid-2022. So we can see that in the long term, the US stock market has been on an uptrend, although there have been crashes across the course of it. And recently, in the past decade, the gains have actually been very good across the longest US bull market in history. Now, this chart shows the annual returns of the S&P 500 with and without dividends. We see that positive annual returns are being generated for most of the time. Next, let us look at Bitcoin. Now, Bitcoin was first created in January 2009 by Satoshi Nakamoto. However, real adoption only began to take place in 2011, and in February 2011, it reached $1 for the first time. It has since increased in price dramatically and became the fastest asset ever to reach a market value of 1 trillion US dollars by February 2021, and it took only 12 years to achieve that. So here you can see the total crypto market cap chart, which is very similar in pattern to the Bitcoin chart because Bitcoin represents a large portion of the total crypto market. We can also see that price has been on an uptrend across the long term. Now let us look at the returns in numerical terms. So the S&P 500 first started including 500 companies in its index since March 1957. So if you buy $100 worth of S&P 500 stocks since March 1957 and you reinvest your dividends all the way until 22nd of May 2022, you will have 61799 worth of assets. So this is a total return of 61699.3% with an annualized average return of 10.36%. If you take into account inflation, the annualized average return is around 6.5% to 7% with dividends reinvested. Now for Bitcoin, let us look at the time frame from Jan 2011 until May 2022. So if you bought $100 worth of Bitcoin on 1st of Jan 2011 at a price of 0.3 USD per Bitcoin, you will have 333.3 Bitcoins valued at 9.776 million US dollars today, and that is a total return of 9.776,390%. Unlike stocks, cryptocurrencies are not being supported by real assets or cash flows, so you will not be able to get dividends from them. However, you can still get some passive income if you stake cryptocurrencies that are based on the proof of stake consensus mechanism. Now, historically, there has been low correlation between S&P 500 stocks and Bitcoin, but recently, as Bitcoin's adoption increases and its market matures, the correlation has increased, and we see that towards the end of 2021, both Bitcoin and also S&P 500 reached their peaks before declining significantly until now, toward the middle of 2022. So both have started declining due to geopolitical concerns, inflationary concerns, as well as interest rate hikes, which have impacted both markets negatively. However, Bitcoin performed worse by declining to a larger extent. Now, since the start of the year until now, 22nd May 2022, S&P 500 has declined by 17.7%, while Bitcoin has declined by more than 36%. So it is more than doubled the decline of the S&P 500. Of course, we cannot look at just the returns without considering the risks involved. So for stocks, they are considered risky because they can record double-digit declines during bad times and are more volatile than bonds or gold. So when you have a 10% drop in the price, it is deemed as a correction, while if you have a drawdown of more than 20%, then you are in a bear market. Then growth stocks tend to be more volatile than value stocks or dividend stocks. On the other hand, cryptocurrencies are even more volatile. Like double-digit declines within a day is considered as normal. You should be expecting it anytime. In fact, Bitcoin has spent about more than 80% of its history in a drawdown of 20% or more. So you can see that you would need to have a huge risk appetite if you want to invest in cryptocurrencies because the movement can be pretty crazy. Now let's look at the history of some of the market crashes for S&P 500. We saw that during the 2008 to 2009 global financial crisis, S&P 500 fell by more than 50%. And during the most recent bear market for the S&P 500, it occurred during the COVID-19 pandemic, whereby it fell by a total of 34% from the mid of February 2020 to the mid of March 2020. Now, the maximum drawdown occurred during the Great Depression period, So that was from 1929 until 1932, whereby it had a total drawdown of 84%. And this loss was only recovered in the year 1954. So normally the S&P 500 on average has recorded a decline of between 30% to 40% during market crashes, but this Great Depression was an exception. Now we look at some of the market crashes for Bitcoin. We saw that in April 2013, November 2013, and the end of 2017 until the end of 2018, there were declines of more than 80%. So this is quite significant. And then more recently, during 2021, a crash resulting in a decline of around 55%. And then November 2021, a decline of about 63% from the current all-time high of 69,000 US dollars to the most recent trough in May 2022 of around 25,000 US dollars. So compared to the stock market, we see that market crashes for Bitcoin occur more often, and when it does happen, the magnitude is far greater than what is seen in stock market crashes. Of course, the exception being the Great Depression, which happened only once, and it was quite some time ago already. So there are some memes on crypto forums saying that if you can't handle the 20% drops, then you don't deserve the 600% gains. Now, this is very true in cryptocurrency world because crypto is very volatile. It moves up and down all the time. So if you can be a long-term investor, then you can invest in crypto. And if you can withstand the crazy drops of between 20% up to 80% or more and do not freak out, then yes, you can invest in crypto. However, because it is so risky, right? You want to consider diversifying your portfolio. So if you already have investments in cryptocurrencies and this has grown to become a large portion of your net worth, you may want to consider reallocating some of your funds from cryptocurrencies into stocks. And you can do so using the Habit Trade platform to buy stocks using USDT. On the other hand, if you already have investments in stocks and you want to explore cryptocurrencies to take advantage of the massive gains potential, then you can also do so. Check out the crypto trading platforms linked in my description section below. However, be mindful that you should not put all of your money into cryptocurrencies because, well, it is very risky. You can lose all of it. There is that possibility, so experts suggest not putting more than 5% of your net worth into crypto. However, it really depends on your own level of risk appetite. So hopefully you would have learned something from this video on the differences of these two assets and you're able to think about which one suits you better or you want to have both of them in your portfolio. Now, cryptocurrency, of course, they can give you crazy 10x or even 100x returns as it is still a relatively new asset class and a lot of people still haven't started investing or trading it yet. So if you are in it, you're considered as an early adopter still. But for stocks, although it may not give you crazy high returns, it can still give you double-digit returns over the long term, and you don't have to worry about sleeping at night not wondering whether your portfolio will crash by 50% when you wake up. So depending on your own preference and your risk appetite, you may want to consider investing in each, a bit of both. It's up to you. So if you want to learn more about investing, whether in stocks or cryptocurrencies, do check out my other finance videos. And also I have included links in the description section below on the platforms that you can check out whereby you can buy and also sell your stocks or cryptocurrencies on global platforms. You will also be getting some good referral deals if you use my links to sign up. So check it out. And thank you for watching. I look forward to seeing you again soon. Take care.